Want to welcome you. This is London with Bitcoin Spike and VIP Trader. We are at the open of New York markets in the USA. Shout out to our VIP traders. And yes, we stream every day. This is London, former hedge fund owner, private, not SEC, not financial advice. We're going to dig into the details in terms of the technicals on Bitcoin. We enjoy trading Bitcoin because of the volatility. Not because of the ideology, but because of the volatility. On the bottom right of your screen, you will see some specifics that we're looking at. This is our trade setup. If you're new to the channel, congratulations. I'm not going to tell you to hit subscribe or like the button. I think that people immediately lose credibility after a market research survey that, yes, people lose credibility when they ask you to do that. So please operate at your own discretion. Now, as we were to look at the details, and I may expand a little bit, we're going to talk about today some interesting things. We noted last week, okay, aside from the technical parameters, which we will certainly look at today, is if I were to look at, let's dig into the technical parameters. That's not going to be easy, is it? If I can, let me undo this. Let me see if I can move this segue down to this screen here so you can see a little bit of the technical parameters that we're dealing with. And good morning to the VIP. How are you guys doing this morning? Hope you're doing great. Hope you had a great weekend. Full of a little bit of volatility. Not too much, but yeah, just a touch, enough to trade. Now, looking at the premise from last night, let's at least cover the technicals. And I want to talk about a few issues that I don't know, in terms of our being in the marketplace, in terms of our being VIP. I want to talk a little bit about kind of what our goals are this year. What are your goals this year as you operate in the market? I think this bear march down the last year plus has been very, I don't know, guys. It's been easy to identify multiple host of participants as we do market research, a lot of participants. And I would just challenge you all to reinforce your own game in the market, not externalizing your source of authority or et cetera, ability to operate in the market. As we see on the 4-hourly. 4-hourly up and over the Bollinger Band. Talked last night in the video in terms of a bit of a whipsaw, just to throw back kind of the springboard action to that specific 20 moving average. Indeed, boom, and then bam, up to this specific level, guys, that specific target feature here. Went over that in some detail last night. It's nice to see it perfectly hit in line with what was that specific durable goods orders came in, right? And it was healthy news, and the market took it as healthy. I think Boeing had clouded up a little bit of the figures. They had to dial back on, but it seemed like Bitcoin even front ran the data release a little bit, which is all intriguing when things front run. Yes, front run meaning it moves before the actual data release. So, and we can chalk that up to a pattern play without a doubt. And there's Venus. Good morning, Venus. How are you? Venus, I wanted to talk a little bit this morning about what we're doing in the markets. Like we get to talk about, because, you know, I sent a, this is a good time for us to talk, guys. I sent a, as we look at the completion, and this is New York Institute of Finance, up and over the 20 moving average, right on the Bollinger Band, which is the standard deviation away from any average, right? What's the average? A moving average is literally the price over the preceding, say, 20 intervals, 20 moving average. That's the line that you see plotted in line with the actual price. So a standard deviation of 2 to the upside, 2 to the downside. Very easy formula, up and over the 20 moving average, and boom, the top side band becomes a target because we have trajected up and over the 20 moving average. That is New York Institute of Finance. Easy stuff, right? Easy stuff. It's nice to see it work well, particularly in the context of a data release, right? When data came down the pipeline this morning, Bitcoin flew up a little bit ahead of time, right? A little bit ahead of the ball game. And I talked on, I think, Friday or Thursday about being behind enemy lines. It was an example that I brought up. I want to make sure that I reinforce that just a touch with you guys today, that you understand before I talk about why we're in the markets. You guys know that we have a select group, and you also know that we're working on some commercialization features that will be much broader and much larger. And as we look at why we're in the market, as you look at why you're in the markets, Okay, as we looked at this weekend, Renaissance Technologies. Okay, when we look at let's say one of the top hedge funds could have been replaced by Citadel, et cetera. When you look at a hedge fund like Renaissance that has and great move. Why don't I toughen up these lines real quickly on the Bollinger Band? Good morning, nice to have you guys here. Great video last night, worked out right in line with expectations. Doesn't always, in terms of those particular specific targets to the upside, targets to the downside. You guys know it is a trading tactic to be balanced with the residual. And it seems like it's a scapegoat, isn't it? Anytime you say, well, it's to be balanced, you need confirmation. It's, you have to look at the entirety of the situation, right? If we had awful news this morning that had come out or something, we could have had a surprise upset to the downside. But up and over that 20 moving average on the 4-hourly is critical. And then what's the next critical if we're going to stair step this up and over? Right, is now achieving price up and over that 8-hourly. Okay, we want to stair step that. The 8-hourly is that next relevant primary level of consideration as you would look at essentially the standards of guys, the most well-respected time frames. I think you will agree that 4-hourly then marches into that 8-hourly, and that's just New York Institute of Finance in terms of New York Institute of Finance. Easy for me to say. But the most well-respected entity teaching, we should say, pro traders. What I talked about on Friday, I want to dial into this just a bit more. The behind enemy lines. It was an example that I brought up for the traders who are overexposed, right? And you have to ask at some point now. You really have to ask at some point now. I can answer this question for you, but as we look at the operation of the markets, as we were to look at traders in the markets, the traders who show up to us even now, and they want to establish a relationship. You all need to understand, if we can talk about this as a group. This is our trade group. You guys know that. It's a pleasure to have you all here. As we talk about the traders who show up, and guys, I deal with them personally, right? Personally, I deal with them. And I deal with the next hot shot. I'm telling you guys, they can be in any industry, any business owner, any level of executive position, down to any other. It could be a guy that builds specialty engines for rockets, or for cars, or for washing machines, or let's say a dryer or a washing machine, laundry machine. It could be anything. I repair those engines. Well, I repair on the washing machine. Well, there's a little engine in there. Or I repair the engines on that car you're driving out there. Oh, okay. Or I repair the engines on those rockets you see. I give that to you for a spectrum that I deal with from top to bottom. Each present their own, and this is very relevant as we look at Bitcoin hitting target. Right, hitting the target. I believe, VIP, that you had a nice channel line in here as well that we've come into contact with. But nice to see the performance in line with, the technical in line with, the specific data release this morning on durable goods. And we've got a little green on the screen in terms of NASDAQ, Dow, and S&P doing relatively well right now. We know the patterns that we're in. We've done considerable review in terms of those patterns last week. We'll run through them here in a bit, just in a bit. The NASDAQ's an interesting pattern, isn't it? You guys know that it's a real interesting pattern to hold on to if we were to discuss the specifics. Our preferred pattern in the market is the pattern. And as we talk about, I'm trying to make it a little bit more interesting for you all to get through the discussion if it seems like I'm jumping around a little bit, because not everyone wants to just talk about, well, what's our purpose? We're going to have a mission statement talk today. It's not what it's about, guys. But I want to cover some of the material that I think throughout the day, and I really purpose myself to talk with you all about something. Okay, it's not just I'm going to throw the microphone set on and just let's go, let's do it. I'm ready. I could do this without thinking. No, I put some time into it. So level of support, level of resistance, buyers on support, sellers on resistance of the NASDAQ, increasing level of volatility, exactly our preferred pattern. And VIP, guys, Where's our real preferred level of interaction here? Believe it or not, the uglier that this thing gets, the bigger the potential swing back to the level of resistance. When the market has absolutely said, this is it, I'm out, everyone starts running for the hills. These become extremely interesting in terms of a recovery play. If you can get this sucker down into here, I'm telling you, even to traject out, bam. Let's work with this in a value zone. You're already on along a level of support, which we identified. You're skipping, hop skipping, and jumping along. The market knows that this is a very, very typically bullish pattern. You know that. Look at the direction of your 20 moving average. Note such as you're looking at the barriers on your specific Bollinger Band or any other band or indicator. Take a look at the direction of your 20 moving average. The direction of it is heading down. Right? We like to when the moving average is heading up, typically. Heading down, heading up, right? Heading down, heading up, down, up. A little bit of indecision, right? So as we were to look at moving averages, understand for the record, many traders will just trade in the direction of the 100 or 200 daily moving average or the weekly. They'll choose one and say, well, the weekly 200 moving average is going up. I'll just trade in the direction of it. Maybe the daily, more likely the daily, but they'll say, well, the average is going up, so I'm not going to try and pinpoint. Maybe I'll structure some orders in around. So as I segue back into some of the details to be discussed, I am reminding you that Friday I talked about behind enemy lines, right? Now, what is that? Behind enemy lines is the notion of the traders. And again, I deal with the guys that, let's say a typical trader comes to me and says, London, and I deal with them. I want you to know I deal with them. We deal with them, right? They'll come to me, and this emboldened self will come to me. Now, whether or not they fix washing machines or Ferraris or Chevys or jet engines or rocket engines or nuclear, who knows what they do. All talks of life. From executive, I always say white collar, blue collar, hey, only thing is that you want to beat the market. And I'm bringing this up in context today after behind enemy lines. Okay, the comment of behind enemy lines. Okay, how do you mentally, how is that productive for you to listen to? This is a good talk, and I know who's listening. So as we look at the full spectrum of traders, right, as I deal with them, it's an investment of time for me to deal with new traders, big time. You all saw in VIP the level of work that I was doing this last weekend, right? The level of work in terms of testing, diligently testing. Keep saying Tesla, excuse me. Good for me, huh? In terms of that, but looking at the level of work that I'm putting into, let's say, divergences to try and bring a good trade experience, you have to understand, I encounter so many traders throughout the years, hundreds, thousands, tens of thousands, right? And the point is this, as I encounter them, they will produce a dynamic to me. And it doesn't matter if they are literally the blue collar or the white collar, or they own the shop with all the blue collars, or they own the shop with all the white collars. Or they own the business with all the white collar executives, or they own the business with all the blue collars, or they're just a blue collar or just a white collar, right? In terms of their work affiliation or where they present in life, it's the same dynamics. And so when I talk about something like levels of capital exposure, level of capital exposure is literally the verbatim talk that I've had with Mr. $500 million in the market. $500 million, $500 million in the market at $55,000 to $59,000 in Bitcoin. I'm not bringing it up to brag at all in terms of what I told him. What was it? There are three levels of Bitcoin: 45,000, 30,000, and 15,000. Verbatim to Mr. $500 million. Not you start thinking, ooh, you start thinking, Binance. Must be a Binance guy. No. Big titan of the industry level person. Titan of the industry. Okay, California, big time. Okay, titan of an industry. So the point is, when I talk about behind enemy lines, I brought up the example, and I just want to clarify this for all of you when I talked about it on Friday. The enemy, as if I were to tell anybody in the scenario, believe it or not, is you. The enemy is going to be you. Now, you're not going to like that. You're not going to agree with that. You're going to say, I bring all this mountain of knowledge. I know what I'm doing in the market. The average trader, I deal with all of them, guys. I deal with all of them. I have a very nice resume in terms of, I'll put it up against anybody. In terms of the day traders I've dealt with, I care not in terms of the specifics behind other groups or whatnot. I've got hand-signed books by Bulkowski, literally. You guys know, and I really, really am fortunate to have his entire set hand-signed from him. He sent them to me, no problem, very cool. Tom Bulkowski, who's done more empirical data research in the markets, guys, than anybody publicly, And I mean publicly, like research floors, teams, buildings dedicated to the level of work he's done. It's impressive. I love looking at it. So when I talk about the enemy and getting behind enemy lines, it's an example to let you know how you're going to feel for a moment if you will purpose yourself not to be overexposed in the markets. Right? You'll purpose yourself not to be overexposed in the markets. You'll decide to engage in some form of training, guys, some form of practicum where you have all the answers to the market that you can put your arms around. You've got more answers than you know what to do with. You've got New York Institute of Finance. You have Bulkowski. Then you have that 20 and 30% of all the time that you run off and think, well, just for now, a guilty pleasure. I'm going to go find the wrong answer again on the internet. Okay. Go, that 20 or 30% of the time is likely to confound you in ways that you do not appreciate mentally. That's what I really believe. From the socio kind of demographic, near quasi kind of recruitment agendas that are on with certain guys, have you studied it at all? Have you studied it at all? Literal kind of recruitment, quasi recruitment. Guys, socialized quasi-recruitment agendas that are in place in terms of different groups that are placed together online for whatever reason it may be. Go that way. Go that way. That's not us, guys. We're exclusive, right? We're selective. I always say this in terms of our traders. We're selective to the extent what? That our traders are good enough, they literally could have been selected. That's just the coolest thing. And I don't care if they're blue collar, white collar. It makes no difference to me which country you're from. It makes no difference to me how you present other than the fact that you want to beat the market. All right, let somebody else filter through all those details for us on an intake of YouTube generally, something like that. We're not pro-political, ideological. Get on out there. Let's trade. So with that stated, maybe it needs to be stated, but as I would talk about the enemy within, or not the enemy within, that's probably some movie, behind enemy lines. I'm talking about the notion that I see from the $500 million. Now, you can say it's not relevant to me, and London keeps talking about this, and I don't need that today. You need it today, I'm telling you. Like the $500 million guy needed it and didn't want to listen, or did, or kind of did, or then he really, at $55,000 to $59,000 in Bitcoin. You can either place yourself in the same category as the $500 million in exposure trader that I dealt with, and it doesn't matter if you have 5,000 or 1,000 or 500,000 or 500 million like he did. It doesn't matter. You can either take off the shelf of incredible advice, boom, on something that is what? Verifiable in terms of the advice through third-party resources. Don't take it from me. Go into your New York Institute of Finance. Go into and talk to your broker. Go into and talk with anyone in terms of levels of exposure that you're going to look at in terms of your operation in the market. And don't take it from me. But a lot of people tell me, hey, you gave me great advice. I was like, yeah, and it wasn't financial. It's just common sense. Go look to the authorities in terms of New York Institute of Finance. Go find what the pro traders are doing. Right? So, but you can follow and you can fall in line with this mentality. And this is the worst thing to see, guys, isn't it? Once Bitcoin goes up, what happens? Everybody wants to buy it. Everybody wants to buy it. Once it's at or nearly at a new all-time high, what happens? Everybody's got to have some. Like, guys, it's just awful to watch, right? That same mentality, which we have to cover, right? And I don't hear on Bloomberg anywhere, guys, and it's not a financial advice network, but I never hear in terms of like levels of exposure. I don't hear it anywhere. I don't hear in terms of, well, we do market analysis, and it literally is gut wrenching sometimes. I just don't even like to. And I have to for purposes of our team, guys, of our trade group. But as we look at the broad message that's out there, it's there's nothing to do with. I guess what most people would say is, don't risk anything or invest anything you wouldn't be prepared to lose. What? Like, I don't know, guys. I would wrap my mind around a level of participation that I was certain that I were going to win. That's me. I would wrap my mind around some level of participation where I was certain to win, rather than continually telling people, well, make sure that you're ready to lose that. Like, this is honestly where I find myself at odds with the entirety of the structured system that we would look at online in terms of the recruitment, near recruitment camps that people are putting together for whatever type of social. I don't know what goes on. But rather than, well, you make sure that you're ready to lose that, I'd rather say participate in the market in a way in which you're going to win. Right? You say, well, you can't say that to people. Train on it. Get involved and train yourself on it. Work with the volume in terms of the numbers of trades that you engage in. Make sure while you're doing that, you don't financially harm yourself. Become consistent and disciplined enough. And the comment that I said, and I want you to internalize this, when I said it's going to be like you're operating behind enemy lines, it's an example. Who's the enemy? 9 times out of 9 times out of 9 times out of 9 times out of 10, it's the trader who shows up and thinks he's got it licked. I see him. I deal with them all the time. And they take my time. You guys have to understand that. And you guys know, you know how things work, but they take my time. They start a relationship with me. They want to have a Zoom call. They want to do, I got a $500 million Zoom call, It's like, okay, this is the way this needs to go, and this is the way this needs to go, and this is the way this needs to go. When you can operate in the markets with a reduced level of participation until you become consistent, throw a literal quarter at the market. Throw a quarter. And for guys who've done this long enough, they're throwing a quarter is 250 grand, right? Okay, 250 million, that's a big quarter, right? 250 G's, 2.5 million, whatever it may be, but throw a literal quarter into the market, watch it dance. Understand that when you do that and you don't know how to trade yet, what are you going to do? That's the equivalent of you operating behind enemy lines, right? That's the example. Why? Because for the first time, you're not showing up in the market trying to make money when you can't consistently make money. You all know this, but when you're trying to make money, you can't consistently make money. Man, those are bad days, huh? You might have a good day every 2 or 3 days. Maybe you start to get where you have a good day every other day, right? And you ought to be having a good day every day, guys. You can have a good day every day, right? You might have something sour up here or there, but the market has a funny way of appreciating and almost taking notes on who's really trying. I just tell you, after the years of doing this stuff, guys, just understand the market has a good way of keeping notes on what you're doing. And so that's the notion behind enemy lines. Getting you past your deficiencies, and guys, it's not just you, it's not an insult, but past the same $500 million guy wants to go in too heavily towards the top of Bitcoin. Whoa. Well, guy, let's get you behind enemy lines. What does that mean? You're the enemy right now. It's like, honestly, the fact that you would want to, I would say to him, the fact that you wouldn't have 10 times the amount of exposure at $30,000, right? At 10 times the amount of exposure down at $15,000. Like, whoa, cowboy, So That is the tendency, that harmful tendency, and I don't mean to call anyone an enemy. That's not the idea. But you understand, it's like get behind enemy lines. It's like, wait, who's the enemy? Like, where did that guy go? Well, the enemy is, you guys know, the enemy would be clearly just your tendency to over participate in the market. All right, so work on the consistency, work on the discipline, and for the traders who have and continue to, it's a phenomenal thing to continue to witness, to be a part of. It's really really important. As we were to look at the Bollinger Band in play, boom, up and over, we had that springboard action, right? Boom, to the downside. Remember, I always tell you, and I did last night, that the 20 moving average is loaded with orders, right? Up and over, boom, right? And then two targets, nicely done. And the aside from our commercialization in terms of what's going on behind the scenes to really commercialize and provide an overall broader spectrum product to individuals, we look at the notion of, why are we here? And I want to talk about, maybe I'll be sorry I said this. I doubt it though, guys. Looking at the details, what is what's going to differentiate us in and through 2023 as we're on into February? Why are we here, right? Is it because we're going to make more money, drive better cars, and have bigger houses and cooler, boats and jets than everybody else? No, I doubt it. There's some good arguments as to what the better house, jet, car. You're gonna probably get into that discussion, at least with me, in terms of particularly with the jets. You just will. Fastest civilian jet or not? Huh? I will ask that question. Fastest civilian jet on the planet or no? No, not. No. Well, okay. You buy a brand new jet, fastest civilian jet? No, it's not the fastest civilian jet. Well, okay. Okay, you take that one. That's the kind of a discussion I would have, but it's a good. That's a very good just example. But why are we here? And it's as we look at the goal and the purpose with which we operate, okay, with which I operate, is the ability to literally, and I almost want to say that. I'm not going to say it because it would involve me disclosing a private discussion. I won't do that. When you can operate well in the market, when you get to the point you can book 4 positive trades, when you can sit down over a period or number of hours or days or a week and double an account within a period of a few hours, sometimes a few minutes, sometimes a few days, sometimes a few weeks, sometimes a month. And as your ability to, let's say, double an account were to increase and say, well, I could double an account that was like a $20 account, then I could double an account that was $2,000, then I could double an account that was $20,000, then I could double an account that was $200,000, or let's say someone double an account VIP, and we've got the history, everything else with a $1 million account, boom, boom, in a day. As we were to look at that, there is an overriding facet with me that I literally just want to be the best. That's it. And as we look at what can be achieved, guys, practically within the context of why we are here, what I'm kind of grappling with just a touch as we talk about kind of the, and I, as I use that, take it a little bit, as you guys see the divergences that are being tested here. Nicely done in terms of the specific hourly, looking at some nice divergences that we ran into on what's being tested right now for VIP, but boom, boom, boom on that hourly, very nice. As we are looking at a differentiator, a real reason as to why we're in the market, I want you all to appreciate and maybe have this thought with yourself, and maybe it's not something that I can tell you, but what are you in the market for in 2023? Okay? Because it can't be to show up and watch Bloomberg and decide how to think, and today how to think is them being confused of how they thought yesterday or last week, and them admitting that they're confused right now of how to think and how to take things in. It can't be that, okay? It can't be Well, I'm going to turn on my 15 YouTube stations and even the guys I like or that I don't like and find the wrong answer. And with all the wrong answers that I find, I'm going to find one right answer and make that your filtration process. And your road to success and glory will be you hopping through 15 different influencers or otherwise. That can't be that can't be the road to greatness. As and I look at that because it just seems like, as I do a market assessment, it seems like there's just a bunch of trade groups, and it seems like I just don't want any part of those trade groups. I just don't. I look at them, or the trade influencer, or I don't. It's not what I grew up liking about the markets. And I grew up as a young kid, like yay high, right? Real young kid, like junior high, right? Before junior high, with a huge respect for Wall Street, right? The Wall Street Journal. Whew. Let me see the back pages, right? Let me see the back pages. The back pages were all the quotes on the Wall Street Journal, right? Little guy, me, little bitty guy. And I want to reinforce this market dynamic of appreciation in line with the fact that we're trading new, new assets, commodities. Looking at Bitcoin, like this has to be something that is like from in here a little bit, right? It just does. I mean, I literally mean it needs to be from in here. And when I look out there and I look at all this stuff, and this is just, we get to talk this morning. This is just the truth. When I look out to everybody else, I don't see anything in here. I see a tagline. I see like a Cracker Jack box. Let me push on watch the thing, and what am I going to get out today? Whoa. That's like, some weird Cracker Jack box. I don't want that, guys. I want to be with the group, and I want to reinstill the principles with those around me of a respect for things like New York Institute of Finance, the New York Stock Exchange, technical trading. Like, guys, it's important to me that we have grown up with an appreciation and that we continue to kind of properly respect this whole market, the concept of the market. It's a big deal to me. It's just a big deal to me. And as we would look at, you guys have to understand, and I bring up the original analogy or the example of the traders that I deal with to talk with you a little bit, okay? That I deal with, they say the guy fixes engines or, rotators. He's into rotators. Maybe he'll fix them. One trader, he fixes them on washing machines. Oh, that's cool. I guess it has a rotator. Yeah, I can see. Or, some guy, he works on rotators or some sort of engine. It's like on a Chevy. Oh, okay, cool. I see that. It doesn't matter where they come from. If it's a Chevy, Ferrari, another one, he fixes them in a Boeing. Oh, okay, great. Or he fixes them in a rocket. Great. From the GED to the PhD. From the GED or not to the PhD, we deal with them. I deal with them. Some of those commonalities in terms of behind enemy lines. The market's going to do the same thing to the GED or no GED, and there's no problem with that, guys, to the PhD. And I have to say with the PhD, and there's no problem with that, guys. Maybe you're overeducated, maybe you're undereducated to participate in the markets. But as we look at really, and we could talk about it, it's important to recognize as we grow who we are in the markets, I have a huge appreciation for people who really appreciate the markets and can deal with it in a sophisticated regard, can understand all of its nuances, or at least want to, on a sophisticated, high-caliber level. It's not the Cracker Jack box push play on YouTube or anything and get this surprise that's either great or gross or good or it's not a shock value on a Cracker Jack box video of a TA. I could do without it, guys. I could completely do without it. As we look at what we're going to reinforce in 2023, I really wanted to discuss, like, why are we here? What differentiates us? I bring up the ability to multiply accounts. And people who know me well, I tell them it's just a bad habit of mine. It just is. Now, when pushed too far, you guys know if you push the equation too far, too quick, that's when you get into trouble. In terms of, your bad habit is doubling accounts. That's great, right? That's really great. As we were to talk about that equation, I see people do it all the time. The trick is to double the account and then not have the day when you get back to 2 or 3 or 4-fold. It happens. And the market's very good at identifying the people who are pushing too hard, right? So as we were to, I essentially just kind of just to talk with you guys this morning a little bit about what we are, why we are, who we are, and as we shift a little bit over the next number of weeks here into a bit more of a, I won't say a private club. I don't want to get into like the private club of who we are. I don't want to do that. But as we commercialize just a touch more in terms of our product suite and offerings, and things become just a little bit more exclusive between us. I want us to define who we are and to not waver from that, to not question our identity in terms of what are the reasons that we operate, right? It's to harness our mutual, respect for this awesome thing called the market. Yeah, it's not to dial in, push play on a surprise. You wind up the clown. Remember the movie Elf, and he did bad at the toy production, and they put him at the worst elf job, which was to test all of these surprise, and the clown just pops up out of the box every time after playing the little melody. I don't like that, guys. I'm not around in the markets to be really known for that or to be associated with that. That's not what I find to be entertaining in terms of my participation in the markets. It's just not. I like sophisticated products. Let's see what we have.
Bullish alert, 15 minutes time frame, capital line bullish, Z-Pack, pro traders only.
Okay, I like getting a phone call. Let's see. I like to get a phone call and it to tell me bullish alert. That's nice for me, and for it to tell me pro traders only. I like that. And in terms of the levels of respect that we have for the market and its participants, it's just a big deal to me because we can also we are making you guys and this is just as we are to transition over the next several number of weeks into a bit more of an exclusive operating environment in terms of our own direct message groups and chats, and as we work on it, video integrations, etc. I want to know the traders. I just do. The guys that are spending a lot of time around me, I want to know who they are. Like just in terms of like we get to know who they are. That's part of our trade group. We're excited about that. And I don't care if you are from Seoul or you're from Nigeria or you're from Alabama or California or you're from New York or you're from, I don't care, guys. But I want to know our traders. And I'm excited about the fact that our traders are going to be hopefully have that same level of respect, and we're not the pump and dump trash. Take out the trash. That's it. You guys know that. We're just not. Never were, right? You see people get hurt and you want to be a part of that, but on the right side of it, no. We want to be that group to reinstill solid market fundamentals, that reinstill understanding and ability to like out-operate anybody in the market. Do you understand when you talk about Renaissance Technologies, they have between 60 and 100 at different times on different projects, between 60 and 100 PhDs in their scientific market development strategy group. Hello, 60 to 100 PhDs at a hedge fund. And you are going to compete with them or against them. What are you going to do with them? Yeah, I think that's a pretty good pretty good. As I put the video up in the back for the VIP, as you talk about a group that's got like 60 PhDs, guys, that's just awesome. That's really awesome. And you're going to compete with those guys. Yeah, and you may say, first thing is, well, it should be easier for me to compete with them. They're moving more capital. Yeah, great thought. Yeah, it should be easier for you to participate or compete with them because they're moving more capital. They're trying to move huge amounts of capital in a day to 2 days. Wow, they got to cover the spread on that. You should have some fun on leverage, huh? If you know some of the ideas of what they're using, you should have the ability to really do well, huh? You just need to get on the guys. You get to. We'll talk about maybe some details around that, guys. Make sure you've watched the video in the back on Renaissance Technologies. Some cool stuff. It reinforces QKD, right? It reinforces our fire and ice kernel regression. It does. That caught the bottom of Bitcoin thus far. Okay. It reinforces a move from the green buy line on the daily up to, I'm going to tell you, up to the golden short. And the tendency which traders have is the following. Let's just say this. The tendency, as we look at this pattern, this is a nice pattern. You guys know this specific broadening formation. We love these patterns. You guys know we just love them. Name of the game, Bing Capital Exposure. Well, look at that. That's nice amidst all the other patterns in play. We talked last night about the 4-hourly move, right? Up and over. Let's look at the 4-hourly candles again and just look at the great hit into target that we have. Boom, the upside band on the Bollingers. Very nicely done. And I just wanted to talk to you guys because as I have to, as I look at this, as we look at our level of participation and Bitcoin doing well, up 1.18%. You guys tell me the price. You tell me the price, huh? Because I'll tell you, like, if you looked at the price of Bitcoin like 10 years ago and then you were to say the price right now, they would be like, I don't think that's legal. I'll just tell you, I don't think that's going to be legal. However they do that one, I would stay away from that. So you guys tell me the price. 23 and change. What is it? Just it's short at 24K, 23.84. As we've got the descending included wedge framework. Pay attention to your internal trend lines, level of resistance across the top, not necessarily from the peak. Pay attention. Your expansions like to do this quite a bit. They love to do this in terms of a level of resistance hit down through. You're parked at that level of resistance. You've hit that level of resistance. Yep, boom, exactly. On the lines, candle has struck into. And as we are to as we're to define our participation in the market, as I come up with taglines, first of all, please understand, like, there is no intent of me to take anyone behind literal enemy lines. It's an example. It's an analogy. I like the analogy because who is the enemy? 9 times out of 10 for the trader who is losing his trades. Who is the enemy? The trader is the enemy. You guys can argue that with me if you want. But as we were to look at that, it's very important for me for you to also understand I'm not literally talking about taking you behind enemy lines. I have to state that because I have many friends who have spent much time behind literal enemy lines, but I like the analogy. So looking at the expansion, and the difficulty was here. The difficulty for a moment, let's say, was here, as we were to talk about the pickup along a level of support, still underperformed in that zone, right? In the specific, let's say in the zone, in the parallel channel. And you guys know we can sit and talk about technicals all day long, and a lot of you want that. And today I want to tell you why we sit and talk about the technicals all day long, and why I talk about more than the technicals, right? Very important. Okay, it's important for me that as we go through this process that we are just we're a little bit different. I just want to be a little bit different. I want to be more distinguished in terms of our operation of the technicals. I want to be known for that. It's fine for me if I'm known for that, if we're known for that with all the major authors or all the real major technical authorities. That's fine with me. I just put them in my Rolodex and no problem. No problem. And they know we have a trade group, and I can write them whenever I want to, and they can write me whenever they want to. I can show them what we're working on. They could maybe tell me what they've worked on that's not in the book. That's fine with me. That's how I'd be happy to be known for that. So level of support pickup, nice level of support pickup. Also dug into what was it that we went as a fallback measure. We used to do this all the time, and we still can anytime. Looking at the specific Fibonacci, bam, right? We went low to high at the 23.6, and we'll go through more technical details as we look at the market open. Look at the NASDAQ, S&P, and Dow, and Bitcoin up a bit. We still have Doge and Matic. Matic down. Nice short, guys. Nice short. Wasn't that an awesome short? And as we were to look at, essentially, you were dealing with a overthrow in this zone. Brought it up to the VIP in the back, and the market's been a little bit touchy. When I tell you that the market is particular about who it allows to short or not, I'm going to tell you because this is a King Kong short on Matic. It is a King Kong short on Matic. What does that mean? That means that if you dug in here and you knew the rationale to get you underneath that level of support, without a doubt, you know it. Let me look at this real quickly. Okay, there we go. Have to color this lineup. The throw over here. You may say, well, London, that didn't pay the previous time. I see. So that didn't pay the previous time. You could have hedged, right? You could have hedged here at the top. What was your drop? Just to talk about it, just to challenge you, okay? Looking at the price range to the downside, over a 20% move. When you looked at potentially hedging, did you calculate the potential for the entirety of the move down below the level of support? When it came to your attention in the back, did you look at it? Did you look at, okay, I could have a 20% move to the downside, and I could have, let's say if we had broken out to the upside, I could have had on Matic, I could have had let's see, it could have been a 20% move. Let's just go ahead and do the full value here to the upside. Oh, whoa, okay, so I could have gone 20% to the downside, could have gone 53% to the upside. Did you at least, before we talk about hedging, say, well, I'm not going to know how to do that, or I'm going to refuse to do that, or I don't want to do that? Did you at least look at, well, we got a over 20% move to a 50% move? Next time, try. Next time I bring up the notion of hedging, try and get out your tool on TradingView that says price range, okay? It'll say price range on it. Price range. Down there, you can put a star on it. That'll mean that it'll show up in your favorites. It'll at least have a star next to it the entire time. So you'll be able to measure to the downside, measure to the upside. And we can get into more hedge tactics, routines, etc., in terms of how you guys can participate in that. It is not. What a great industry, huh? Very, very interesting. The industry that we all grow up loving the markets, right? And as part of that, if you're appreciative of the markets, what is the symptom that we have all experienced? I'm not sure what we would call it. It is the market is sophisticated enough and sometimes counterintuitive enough, isn't it, that you will, as a matter of fact, the fact that you wake up and have a cup of coffee almost guarantees in the market, at some point you're introduced to a new concept or a new dynamic, a new operational detail in terms of how to configure yourself in the market or a trade in the market, and you are not born with that information. You just are not born with that information, are you? No. Time out. Split hedge, split this, split what? Split call, short, put. Hold on. You're going to get into some parameters with the market where the inclination of the trader, and challenge to you guys as you had a good trade weekend, saw a nice pickup. Nice fan dynamics, by the way. Excuse me. As we were to look at the details, as we were to look at the details, I may need just a sip of water. As we were to look at the details, your participation in the markets, and this is a dangerous thing. It's an unfortunate thing. I see it in the markets, and you are going to agree right now that you've probably done this. You don't have to admit everything, but as we look at the trader mindset, traders will get in the company of someone who understands something, and it's like an economics professor, right? Who's just telling you feel like the economics professor is just telling you the easiest way to make money in the world, and that your job is to agree with it. You have to sit there and you have to agree with it, right? Whether or not you understand it is probably the most convoluted principle you've ever heard of. You didn't read that chapter in the book. You have no idea which book he's talking about, but you're sitting there, you're on the front row, and he's telling you specifically, in college or grad school, telling you specifically how to make money and nodding at you. Isn't that right? Now, the trader, the typical trader, this happens to everybody. I see it everywhere, guys, is the trader will sit there and literally, it's just funny, guys. The trader will sit there and just be like, that's right. Yes, that's right. That's exactly right. Between the call and the put, it's instructive to the extent, it's relevant to the extent that we getting involved in this process, if you're involved in this process and you still don't know everything, right? It is literally that defines the process, right? That literally defines the process, and that inclination. It has to be a bit humorous as we talk about it, because traders are consistently, and guys, it's just kind of one of those consistent things that you see traders, because we deal with a lot of them. I deal with a lot of them. Is you will have a tendency to sit and say, yes, that's right. Yes, that is correct. Yes. And what's the biggest, this blind agreement? What is the biggest blind agreement that I see in the market that's relevant to traders in terms of dinero, amount of cash to be earned in the market? What's the biggest blind agreement? Not understanding but still shaking head. Yes, that's right. Because I see it. Probabilities. Yes, without a doubt, the number one fact that I see, or commonality I see amongst the traders I talk to. You guys talk to them as well, right? You out on the streets or out here and there or anything else. The understanding, when you say to a trader that yes, they need to operate in line with and focus on those higher probability trades. They're all going to say, yes, that's right. It's that student who didn't read a page in the economics book that has shown up on the front row of the Ivy League, right? And is going to sit there and just nod along with the professor. That's right. And as chapter 3 said last night, would say the professor, the diligent response to the Keynesian theory and the contrarian view would be, it's almost like in order to not be called on, right? You're the front row students of the Ivy League, right? And talking about the contrarian theory to Keynesian principles digested through the subchapter of 2 of this and that, and almost in order to not be called on, understand the diligent front row sitting student has sat there and just is going to nod along in order to not be called on, right? So it's that blind agreement that we also see in the market. It's confusing. It's not intuitive. It's not pre-programmed, show up instinctual information that you guys are supposed to have in either business or economics or life in general. You know that. It's not implied in economics. Market principles and know-how and trade execution. It's not. No. It's not implied in economics, or it's not direct economic principles that teach you how to hedge. You think business school? You know how many MBAs we can stack up that are graded at administration, understanding what a board is, right? A board of executives. Oh yes, regulatory issues, board of executives, shareholder rights. Great. Let's execute a hedge. Whoa, needle scratches off the record, right? Whoa. Hold on. So it's going to require a level of specialty from you. In terms of your execution. And if you struggle with that, just understand that there are some things that if you challenge yourself, we have some of the best, if not the best, sources for your not having to engage in blind agreements, for you actually figuring out the answers. And it's going to be a process, right? And the student at the front of the class, this is a big deal. The student at the front of the class in the example who shows up to the Ivy League economics session, who didn't read chapter 2 on Keynesian contrarian view, who's sitting there and, just to kind of not get called on is just enough, just nodding along, and that's right. Yes, that's right, professor, as he rehearses the reading material. The way that the student cannot show up in class like that again is the student goes home and reads the next chapter, right? Then the student is maybe a little more relaxed, a lot more informed, doesn't have to sit there and just blindly agree with something going on, and that shouldn't be a real problem for you unless you just don't want to read the chapter. And to the extent that you're not finding the information that you want in a book or a chapter, right? And in terms of it, like, this is a trade execution. If you're on 100 rounds or otherwise, are trading, just whatever training program, guys. As you were to wrestle with some of these issues, a little bit of trial by error goes a long way. Just a little bit of trial by error in the markets. Can you spend a couple hours with a couple dollars, literally a couple dollars, and maybe a how-to guide with $1 or $2, and a little bit of trial by error, and you start to figure things out. The guidelines that we have, you'll start to figure things out. As you, I guess, Richie, what do I say? In terms of the relevance of this conversation, what I want to talk about is just to reinforce the principles of the probabilities, okay? And it is easy to get wound up into the mix of everything else. The probabilities is the biggest, that's the biggest situation that I see, okay? I deal with a lot of traders, guys. I've dealt with a ton of them. Very, 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 very good ones. Very, very good ones. Extremely good, top tier, numero uno ones. Okay? So when we discuss issues, and I bring that up, guys, because it's not all the washing machine guy or versus the blue collar versus a white collar. No, specialists, literal trained specialists, top tier, top rank, top of the game traders. Okay, and they still have what? They still have questions. Even the top number one traders, they still have questions. Still, they have questions. That, I'm not sure, is received well enough, but if you deal with the number one traders, maybe it's one of the reasons they are the number one traders, they still have questions. Right? Now, as we deal with this issue of the expansion, now, you may get to the point where you want a different answer, right? But for right now, we know that this is a strong pattern to break through 72% of the time, the top side resistance. I know when it's not a pattern that is, and I wanted to discuss this today as well. Did you know Renaissance Technologies hedge fund, what is one of their biggest like the Teraja Ula would say in Arabic, like first class, top class, really the top level info they have that they kind of start to touch on and talk about. Aside from kernel regression, right, okay, that we use in our indicators. And again, you understand when I say that we have limitations with TradingView as to how much we can actually execute or not due to the complexity of our calculations? Yes, indeed. Yeah, like Renaissance Technologies, storehouses full of servers and different things, just 60 to 100, probably 60 to 80 PhDs on standby, literally calculating scientific details through the markets. Yeah, so our kernel regression, they use kernel regression too. Yes, they've got rooms of servers. We have TradingView, right? And you guys experts at servers, they're kind of a hassle to take care of. Um, they are like a baby. You have to, make sure the air conditioning's right, the power is right, all these different things with servers, right? Your own calculations. You could rent time on a D-Wave quantum computer if you want to. A little bit of issue with quantum, just here and there, all for naught. So, looking at the little bit of cool off on the equities. Getting back to the issue, what's that Terrajoula? What's that first class? What's that key ringer for Renaissance Technologies? One of them that you'll hear repeated. What is it? What is it? I talk about advanced linear calculus frequently, right? I tell you guys stories about me in advanced linear calculus. Like, what is it? How is that relevant? Come on, right? That's just my deal. Advanced linear calculus, right? Perfect score in ACT math. Like, I want to drill. I had that mindset beforehand. I'll just say beforehand. Went through a little bit of a journey on that. Now, in terms of Renaissance Technologies, in terms of the hedge funds, in terms of that top tier with the 60 to 80 PhDs, right? What do they talk about? Differential geometry. Multi-dimensional differential geometry, kernel regression. Aha! Aha! Differential geometry? Huh. I mean, because what is geometry? Yes, we all know. What is geometry? Huh. Says the trader. The easily identifiable. The easily identifiable. This is on the cover of your geometry book, right? Yes, maybe with some additional, right? Some of this will start to look familiar. Just an example, right? This would be something you might see on the front of a geometry book. So the top hedge fund in the world, right? Arguable with Citadel. Just give them the credit for what they've done. They've done extremely well. Let's not have that discussion. But they're into differential geometry. Differential geometry. This, well, instead of that, let's do this. Let's do that instead of what we just had. Okay? Let's say this is what we had here. Differential geometry, calculative. And you start to get into multi-dimensional differential geometry, kernel regression. Like, hold on. Yeah, that's what all those PhDs are doing. That's what all those PhDs are doing. Now, I have to bring this up because it's a nice moment. Let's see what's going on with NASDAQ. Pulled back a touch, was up a little bit more strongly. And I like moves like this. I like moves like this because I know who in our group is going to catch them. Because I know you guys. I know how you trade. It's nice. Now, just talking a little bit about this morning, what makes us us? Why are we a trade group? Why have we decided, right, to be in this market? And really, essentially, I just have to say, as we look at this year, this coming year, and as we explore the possibility of becoming a bit more, seeing what is this called, guys? It's a throwback. Hold on. Didn't this just happen yesterday? Come on, guys. You tell me. Didn't this just happen yesterday? Didn't we just trade this yesterday? I mean, the same exact pattern. Didn't we just trade the same exact pattern in the back yesterday? Like 100% the same exact thing? yesterday over the weekend? We did. The same exact pattern, the 3-minute rising wedge at the end of a tail run, overperformance, up and over, level of resistance, and a drop. Didn't we? Literal carbon copy. Nice move. Easily digestible in terms of the move, if what, right? We talk about, first of all, the worst time to get excited about Bitcoin is when? When you are seeing the price go up. It needs, if you're breaking through resistance, you're breaking through a pattern, understand your probabilities. But that tendency in the market is just, it just can devour you. You guys know that? So, and I always tell everybody, the answer to this question. You guys like this. I got to tell you, I hope you like this. Is Bitcoin going up or down? You guys know. Is anything going up or down? Where are you at in relation to your 5-minute Bollinger Band and your 20 moving average? Bottom line, where are you? Where are you in relation to your 20 moving average on your Bollinger Band? John Bollinger, superstar? Now, he's not out there driving a Lamborghini. I got to tell you guys, John Bollinger, he has his own website. He's not out there driving a Lamborghini. Maybe he doesn't like Lamborghinis. But you got to consider that, huh? Hold on. John Bollinger's not out there driving a Lamborghini? Maybe we need to contact John Bollinger. Maybe that's his number one thing. Maybe we need to contact John Bollinger. Almost seems imperative at this point, huh? Fact, huh? Stated. Okay, so the critical, let's bring this up here. This is the chart that I'm looking at. Let me dig into, let's see if I can get this on the 5 minutes so that you can see it a little bit better. This top line resistance on that 3-minute is highly relevant. Let's see if you can bring that up. You see the top line resistance? That's what I have been dialed into on the screen, on my private screen. It's not private, but just so that we have that. Now, shout out to Venus. Good morning, Venus. Venus did awesome. She synthesized some information yesterday and told me what for. I was like, whoa. She just calling the shots big time. It was awesome to get her input on the market based on everything going on in the back. And, I got her synthesis. I'm a lucky guy to get her synthesis. It was pretty cool. She gives me the synthesis and for these following reasons, just her absolute market deduction. Boom, nail on the coffin short. Well, fantastic. Fantastic. And recommending just, always the standard things that, London's going to say, are we over or under the 5 moving average? She probably is annoyed by things like that, but I'm never going to stop doing it. Never overexpose this and that, because the excitement of the trader, right? It's just, it's something that we get to deal with. And in the context, right? In the context, we do discuss, right? What do we hit into? 15 minutes? 15 minutes, tough, huh? Unless you're really going intergalactic, 15 minutes, very tough. You guys know that. 15-minute pretty much is a mainstay. Starting to go a little intergalactic, the hourly, the 4-hourly. Really going intergalactic to the downside or upside. Pay attention to the daily. 8-hourly gets in play, but that daily, hello, right? Love the daily on spot in terms of fire and ice. So nice throwback. What did this have? It had specific, great target hit to the upside on the top side band of the 4-hourly, incidentally. And let's just look at this. So differential geometry. You don't have to be a math expert, right? We don't have to be math experts, but we can appreciate the fact that in our group, at least we have some kind of an appreciation for the fact that for the truth of who are these guys that are really beating the markets. Who are these guys really beating the markets? It's a nice group we have because we understand those guys are into things like differential geometry, and they have hordes of PhDs. They hoard them. They prevent them from working at other. You want to know how the number one gets there? They hoard them, and they prevent them from working at other hedge funds. Truth be known. I would guess, right? I'll just say I would guess. Yeah. So we talked about to get up and over. We talked about the next level great hit on up and through, and I get to just show this on the 8 hourly. Bam. Nicely done, huh? Nicely done. So some decent volatility on the open as we saw Bitcoin front run the producer data. And we didn't schedule into. Can someone let me know? Bum, 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 bum. And this is where we need. I may have to just dedicate a earpiece. Maybe I'll just do that. What do you guys think? It's not easy unless I know that you guys are also listening to Bloomberg, and then it's almost like why would we sit and talk over Bloomberg? But we need like a red light Bloomberg on, red light Bloomberg off. Let's see what we have. Bloomberg, just a little bit of an update. Turning point for Ireland. Okay, today marks a turning point for Ireland. Okay, that's nice. Let's see what Bloomberg has for us in the form of. Come here, Bloomberg. Reach a deal over Northern Ireland Protocol, ending more than a year of wrangling over the post-Brexit settlement for the region. Okay, so the Dow, Ford Electric. What we're looking at. Uh-oh. Uh-oh. U.S. pending home sales surge 8.1%, the most since June 2020. Yes, that would be the housing data. U.S. pending home sales rose by the most since June 2020, potentially a temporary reprieve as lower mortgage rates in the month helped prop up demand. I see. So, we are in this mode, and it's an interesting mode to be in when you're configured mentally around stronger data being worse for the market because it means a stronger Fed and inflation is the boogeyman, or the Fed is the boogeyman, or the stronger data is the boogeyman. Yeah. You can get a little bit side. What would we say, guys? You can get a little bit distracted, reasonably distracted away from your technical parameters that as we were to look at, and I just wanted to talk to you guys a little bit about this morning. Why are we here, right? What distinguishes us from the residual? Is it just, well, okay, fine, you want to be the best? That's a big part of it. It just is a big part of it. As I settle with it, like, why are we here? Because we want to be the best. Maybe we want to do things that no one else has done, right? Yeah, I put a feather in the cap, notch in the belt, whatever you want to call it. Trade group. Trader tells me he wants to make $1 million in a day. Trader does what? Makes $1 million in a day. Bam, bam. Right? I want to be the best. That's just it. That's how I show up. I want to do it in a way that respects and reinforces the market. I want to have cool taglines and culture. When we talk about fire and ice, I like it. When we talk about rocking the bells, I like it. When we talk about behind enemy lines, even that, I like it. I do. Understanding it's not you that's the enemy, it's your tendencies in the market. And if I can't get you past your tendencies in the market, it's all for naught. It's just all for naught. All right? I want you to outcompete guys, the Renaissance. Let me take a look at this chart real quick. The Renaissance Technologies that has 60 PhDs on staff. 60 of them. I want you to beat them. Hello? I want you to beat the team who's scientifically approaching the market with stacks of theorems and differential. Some of what we use is the same of what they would use. I want you to beat them. Now, filter in the process and the procedure of what you're doing. realize that in the markets you are competing with groups that have 60 PhDs full-time employed coming up with new theorems and posited into literal scientific work groups for new inventions to deploy in terms of their capital in the markets. Now, is your source going to be a Crackerjack box, YouTube play, social media surprise? What's going to come out of the box this time? Do you have time for that? I do not. I want to be competitive with, and I want to outcompete, guys. I want to outcompete. I want to beat the building full of 60 PhDs in the market. That's what I want to do. That's what I purpose to do in the markets. I would not be doing this if I did not think that I could. I want to achieve that. I don't want to borrow all of the fundamentals in terms of what they are using in the markets. I don't want to borrow their playbook. Listen to the founder of Renaissance Technologies. Does he have a perfect playbook? Listen to him. Does he have a perfect playbook? No. Would you just blindly take everything that he's using and say, well, we're going to adopt that. I'm going to take that. No. You really listen to what he says? Does he have a perfect playbook? No. So therein I find competition. Therein I find a nice level of intrigue. I find a great market to participate in. And it's just with that level of recognition and diligence that I want to proceed with you guys in 2023. And I always tell you, it's your trade group. You're in it. It's my trade group. I'm in it, right? And I just want it to be the absolute best that we can make it in 2023. So a little bit of cool off Nasdaq, S&P. Let me see if there's anything else I wanted to talk about today. Really, I just have to say, guys. Really, as we differentiate into what we're going to be throughout the residual of 2023 and 2024, I just want it to look and feel and be completely different than any kind of crackerjack box that excitement is the root. You know, it's just I don't want to the snake oil, the all that stuff, the crackerjacks, the surprise clown box. You know, play the little wind up music, like you know. I don't need to be assaulted like that in terms of my social media or my engagement in the market. I just don't. It's not healthy. I don't think it's healthy. So this feature here, this is an interesting feature here. We talked about the 8 hourly, didn't we? Let's see what this feature is going to look like. Can I get this over here? Can I swap these? Yes, I can. Looking at and testing, guys. We're testing a lot of the different equations that are going into our code. We are ensuring that they are personally scripted in terms of the actual code that is being generated for you all to use. Nope. Let's see what we have. This is going on right now in the markets, in Bitcoin. You have to agree on the 4 hourly. We have a bearish expansion, right? We have a bearish constriction. The only thing that gets us through this issue is from the 4 hourly to the 8 hourly, the notion that we have, and it's called the, if you want to draw this out, it is the rotated rectangle. Okay? And the notion that we have this diagonal diamond, okay, is about the saving grace, needs to be pushed and pulled a touch in terms of, that little ghost is awesome, huh? Pushed and pulled just a touch in terms of the issues going to be as you draw out a diagonal diamond. We like them, first of all, because of the probabilities. And yes, when we talk about that blind level of of agreement in the market, which the traders will just, it's the zombie nod, right? It was like Harishi Dalai Lama, whatever is yes, the drone, right? Answer that you need to participate in line with the probabilities, but do you have the probability sets? Do you have the backup statistics? Like, go get them. If you don't know what the probabilities are, get them. A lot of them have not been publicly available for too long. Some of them not long at all, and it's a short number of years, some of them. Get them. It's not just another piece of information from another guy that's trying to tell you how to day trade, either me or those sets of information. Comprende. Some of it is new information. Pleasure to have some of that information. I feel very fortunate to have it. And I very much appreciate all the work that's gone into it, without a doubt. Very much appreciate it. It goes without saying. Huge. I'm a huge fan of empirical data. So looking at this structure here, that 8 hourly, the one thing you run into as you look at this, you haven't quite hit that level of support. We know that. You haven't quite touched down into that real level of support here. Have you guys looked at that? If you pushed and pulled on your screen just a touch, and the more you try and line up that level of resistance across the top, it's like you've just got to cut into, really you've got to make an assumption and cut into and leave out a bit of this level of support here. Okay, so this is the, that's what bulls are looking at, bottom line, and the bears are looking at this, okay? You've essentially got, in the bearish camp, you've got a compound expansion leading diagonal. You've got a constriction rising wedge. And amidst the lower probability functions, like you can challenge the trader to beat Renaissance Technologies. Okay, you can do that. How would a trader start? To me, trader sees 72% to 75% to 82 to 5%, and trader says, I'm only going to participate in the trades where? Yes, I'm only going to participate in the trades with the maximum level of probability. I'm going to sit at the blackjack table and literally only, imagine only, guys, can you imagine this? Can you imagine being allowed to sit at a blackjack table in any casino unless you owned it? I don't even think if you knew the owners. I've known some of the owners of some of the biggest casinos. It wouldn't fly if you knew the owner. It'd have to be yours. And even in that one, knowing this in context, even in that context, even if you owned it, you wouldn't have this privilege. You just wouldn't, based upon what I know of the industry. I know a little bit, okay? I've known some of the key as you look at, that one. Oh, did you stay there when you went there? Oh, nice. I've known some of the owners of the casinos, big casinos, okay? And no names mentioned. As you were to look at the possibility to participate in literally, I'm going to hand pick my, are you kidding me, guys? I'm going to hand pick my involvement at the blackjack table. I'm going to limit it to circumstances when I'm only, when I have a certain setup. I literally have a specific setup on the table, literally within a maximum probability. I'm only going to participate in those hands at the blackjack table. Man, it must be nice, huh? Just think about it. Think about it. You mean, and in fact, guys, the analogy is the following. You mean to tell me that you're going to have all the dealers at all the tables literally just fold over the cards for you. Boom, 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 boom. And you're just going to walk through the tables and walk through and decide, I'm going to sit down at this table and I'm going to put my money on this hand. Do what? Even the owner of the casino's not going to have it like that, guys. He's just not. Maybe off hours. Maybe he's probably got shareholders, partners, all other kind of problems with this one, you know. And who knows what happens in casinos. But as you would talk about it, as you look at it, do you mean that you could sit out anything? You could sit out anything except the absolute number one best hands. You could have 20 dealers and 20 tables literally throwing out the cards. Boom, 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 boom. And you get to just walk down the aisle of blackjack. And you get to literally take a look at, no, all those different hands. And you get to decide literally which and where and when you want to sit down and engage in your trade, engage in your, I'm going to put the money on that one. Are you kidding me? That's pretty cool. Sounds like what? It sounds like you do pretty well, huh? You think you do well? It's all of the other, guys. It's all of the residual. As I talk about our preferred patterns, as I talk about participation in the markets at the highest level of probabilities, it's awesome, guys. You have such an ability to participate and do well in the markets. And what's the question? What's the question? Might even get the guy. I just tell you, it might even get the guy. I don't know, guys. In terms of the example at the blackjack tables, he's only going to participate. He's going to have the dealers, just 20 different dealers. And go ahead and compound it. Each dealer at each table at 20 tables is going to sit there and deal out, four hands. Four hands for you to look at each of the 20 tables. And they got their hand. They're going to deal you out 80 hands of blackjack. 80 hands of blackjack. And you just get to walk through. You get to decide which hands you want to. Hello? Now you're talking, right? You get to participate and choose your level of participation in the market, right? The guy who doesn't do so well is the trader, and some of this needs to be a practicum. Some of it needs to be a level of volume repetition. I got to learn I got to learn what the chips are on the table, what the cards are. If you're playing craps, maybe a better example, huh? I got to learn what this table is. You got to get through, play with just nothing, get there and understand what the, understand the details of blackjack. We'll stick with the blackjack example. But I bring that up because there are going to be some hands that you're going to want to trade, that you're going to want to play based on probabilities. The same, I'm going to say if you're compelled to trade too much, it's going to, that's going to evidence itself, right? It just is. If you involve yourself continually in the lower probability patterns, it's going to evidence itself. Particularly, I am a fan, as you all know, of involving yourself in that biggest nod along. The trader's just saying, yes, I understand. Every trader's going to agree, yes, you need to participate in the max probability patterns. They just are. They're going to agree with that. But realizing that in the markets is a whole nother step. And I really want you guys to master that as we look at 2023, as we look at our ability to beat the markets, whether or not be on a Renaissance technology basis, whether or not be on a Citadel basis. I mean, some of those guys, they got nice contracts, right? They got really nice contracts. It's hard to beat a nice contract. But you can do it through through defining what you are, guys, your capable level of success. As you look at like what you're going to achieve, what's the guy at Citadel got? Does he have exactly the desk he wants, trading exactly what he wants to trade? I get into some of those accoutrements that the private trader can engage in. Beating your chest and saying, I made $1 million today in the markets. They may be able to say that, but it's maybe that's on your time if that's your goal, right? And that has been the goal of some VIP, and they've achieved that, $1 million in a day. That's cool. That's on your dime, right? That's on your you get a profit share of that. You get that. If it's I want to learn how to double my account in the morning. Bitcoin just moved down 1%. I want to be able to do that, and I want to be able to double my account like that, and then go do whatever I want to do the rest of the day. That's pretty cool. Maybe you want to do that, or you want to focus on the ability to do that, and maybe you want to do that like 3 or 4 times in a day. I tripled my account today, or I quadrupled my account today. In talking about that, understand one thing. The guy who has learned to triple or quadruple, guys, a $10,000 position or a $20,000 position or a $40,000 position or a $50,000 position, he has worked with, I promise you, he's worked with so many stacks of 10,000 or 20,000 or 30,000 or 40,000 that it has become reasonable for him to expect now to just multiply that money. You get a feel for it. You start to get a feel for it. But you're not going to just show up with 10 grand and say, I'm going to go ahead, I'm going to double this money today. Oh, no, guys. The guy who's good at doubling the 10 grand, the 50 grand, the 100 grand, that's good at doubling 100 grand in a morning, that's some cash, guys. In a couple hours, that's some cash. If you expect to just double, listen up. If you expect to just double 100 grand in an hour and a half, maybe a shorter amount of time, maybe 10 minutes. Guys, the guy who is good at doubling 100 grand or more, this isn't screaming price action. This is not hugely high velocity price action. But the guy who's done that, I just tell you, based on what I know in the markets, he has worked with a lot of stacks of 100 grand. Right? And it doesn't need to be that he has an infinite amount of money. But I'm just telling you, the guy who can double 100 grand, he's worked with so many stacks of 100 grand. It's like, yeah, he's kind of gotten it down, right? He's kind of gotten it down, right? It's that don't put it beyond yourself to say, I want to sit down in the morning and make 100 grand. Don't put it beyond yourself to say that. I'm just trying to give you a little bit of insight in terms of what I know those individuals to be capable of, how they achieve that level of proficiency. Some of it, and you guys know, former hedge fund owner, private non-SEC, not financial advice. Does this sound like financial advice? You got to be kidding me, right? Does it sound like financial advice? The guy I know that could sit down and multiply $100,000 by 2 in a single day is like, that guy ain't giving financial advice. I promise. That guy would be me. All right? The people that I know that can do that, they joke around a lot, and they do tell people it is financial advice. You're like, are you crazy? You know, they listen to this guy. He's literally crazy. He's like, and they say, and I'm going to give you some financial advice too. It reeks of not being financial advice. It reeks of it, guys. It is high throttle ability to operate in the markets. It's exciting, isn't it? Very exciting. You can sit down and you can multiply 5 grand and double that. That's exciting. You could double $500. That's exciting. If you can consistently learn how to double $5, it gets exciting. And the guy who's trying to double 100 grand, if he can't double $5, he has no business being in the markets trying to double 100 grand. His net is going to look awful. If he can't consistently double $5, he has no business being in the markets trying to double 100 grand or trying to double 500 grand. It's a bad hand of blackjack for him. Might as well be a bad hand of blackjack, and some people trade that way. You guys know this. They might as well go to the casinos. They're already going to the casinos. They're in 500 large any given day of the week. You know this. It's a problem for some people. And for other people, it's not. They got the float. They got I bring up some gambling analogies. It is not the premise upon which we operate. But Bloomberg talks about the bad bets, don't they? Frequently they use gambling terminology. I have literally been on the phone. Literally, I can confirm I've been on the phone with New York Institute of Finance. Literal New York Institute of Finance, where Wall Street goes to school. And they have literally, I can confirm this, literally told me, man, trading is really, it's a sophisticated form of educated gambling, isn't it? What? I'm like, what? That's literal New York Institute of Finance verbatim to me. It's because of the risk involved. It's because of the probabilities, right? Your shifts in momentum. Yeah, that's the truth. Do I like to report that? Not necessarily. Are we just a gambling club? Not at all. What is it that we appreciate about the markets? We appreciate the level of sophistication in the there and beyond, in the market data, in the empirical sets that give us the probability of a return to a flat top resistance. Man, there's a lot of gravity at that level, huh? Oh, yeah, right? Big time. What's the percentage? And I'll tell you the number of VIP that are trading well right now have this move right here on standby. They just do. They have that literal move in the exact probability of a return to a flat top resistance. They literally have it on standby. 100%. Nice move, Bitcoin. And I know you would say that you're not gonna double $100,000. You just did. You just did, or you didn't, or it just cost you, or you're not gonna double even $5, man. You just did. You went from 1% up to flat to 1% down. You've moved 2%. Man, you could carry some cash at some leverage like that. You could. Not too awful long, huh? Say you started at 6:30, 7:30, under 2 hours. You've had a 2% move here since we initiated on the start of, yes, indeed. Since we initiated on the start here. Can you conceptualize trading and making $100,000 in a morning? Can you conceptualize making $500,000? Can you conceptualize, can you visualize making $1 million in a morning? Can you? On a move of, this is the one thing, understand this, as you start to talk into that equation, a move of 2%, on a move of 2%, the capital requirement goes up to make those larger amounts of money, right? You talk about like doubling your money. On a move of like 20%, well, your capital requirement goes down. You have more percentage to work with, more percentage to work with. Right? So that's a big deal. You're playing off a move of 20%. Hey, I could use less capital. Or you're moving in and around with a 2% move. It's like I might have to use a little more capital. So that's one of the advantages of markets that are, and we feel that a little, don't we? We do. We feel that, but it's an incredible time to master your trade skills, isn't it? Let's take a look at, let's go into the 3-minute. And let me dig into this. And good morning to the VIP. And we had some bearish divergences on the 3-minute. Up above, to say the least. They traded well, didn't they? Boom. That's a 2.32% move. 2.32% move. What do we go up to? Target. On that 4-hourly, what we talked about last night, that 8-hourly did not hold, did it? We talked about on the, what was that phone call I got? Looks like a hit into the golden short. You guys update me on technicals. A little bit. Streaming got my hands full just a touch. But looking into that, on the 4-hourly, we made it up in 2-hour. Very interesting, huh? Very important. We did make it up to our, let's say the 4-hour. Let's turn on the, not sure we hit that or not. It may have backed off with the shift. You guys will have to let me know. We had a capital shift on capital line on the 15-minute. Got a phone call. Bearish. Nice. Played out very well. Let's take a look at that 15-minute and let's look at the capital line. That capital line, got the phone call here. Boom, 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 boom. Nice move. It led to and through a move beyond that 20 moving average. Topside band contact through the 20 moving average down to the lower target band. Boom, 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 boom. Yeah, nice move. Now, traders who are really trading are down into the 30 second. You guys know this. They love this 30 and this 15-second time frame. Man, I don't know how they get just wound up into it. The biggest challenge for a trader who's that far scoped in, always have another screen, eagle eye, big picture. Big picture first. Eagle eye, actual eagles, or satellite, right? Zoning in to your 30-second, 15-second, zooming back out, always having in mind. It's a big challenge for traders. It is why we have this composed in the background, always 24/7, 365. Okay? And let's just let's say this. As we roll through today, I want you to think a little bit about, and it'll make our group so much better, if you will think a bit about what you are in the market for. Why are you in the market? Why are you here this year? Why are you in the trade group? What are you building in your life? Really, as you look at your involvement in the market, what are you building? What do you want success to look like in 2023 for you? Because, yeah, New Year's, okay, great. We get on into, the New Year's resolution versus, just a kind of an inventory, right? If you were to be able to write the script for the third and fourth quarter for you, what does it look like? I really want to challenge you today as we delve into what we're building, and I deal with that daily, both in terms of time involvement, in terms of the relationships. I'm really excited about the relationships in 2023. That's why we have these awesome headquarters. Shout out to Venus. So excited to be building with you. The relationships, yeah, that define a lot of our market involvement to an extent. I mean, to the extent Tom Bulkowski. That's pretty cool. He's a big cat. He may be arguably number one, along with Murphy and New York Institute of Finance. They finance where pro traders train. They have the goodwill. They've got that New York address. They've got the goodwill. They've got the history. They got a great setup. New York Institute of Finance. They get to kind of play fast and loose, don't they? A little bit, don't they? Yeah, we own the casino, huh? Almost a little bit of that. Bulkowski has done more work than anybody. You know that? He's done more work than anybody. You know that? Nice level of a 30-minute. Let me bring this chart over so you guys can see. This was a nice hit back into, and again, was it Venus who just laid it on the line yesterday? Short. She saw it. She knew it. She's great, guys. She's good at what she does. She's awesome. I just got to say that. You guys know. I tell her all the time, huh? And she knows this. She knows it. And you guys know it in the back, too. What she trades. I'm like, who would you think would be my partner, Venus? Are you? Come on. You got to be the best. I get to say she is the best. She's awesome, guys. Really, really great. So awesome synthesis last few days, Venus. And I mean that. Talking about this throwback. Who talked about it? Venus. Beautifully well done. Expectation. Boom. And what else do we get up to? You see these lonely little descending triangles somewhere. You know this. Everybody knows this. And I tell you, when you see a lonely, you guys know this, when you see a lonely flat bottom support up above somewhere, you better pay attention. Focus on your coins, your investments with liquidity. That would be one thing to pay attention to. But when we see this flat bottom support, look at that up there. Man, it's a flat bottom support. Ooh. And then you say, what? Well, I don't know. Look at that down there. Differentiated time frame. Yeah, we have this level of prominence and conformance here with level of flat top resistance. Ooh, look at that down there. Right? Ooh, look at that up there. Slingshot, boom. Slingshot, bam. It's the gray areas with which we're presented that, well, I know, but on the lines, this is what'll get you. Just be prepared. Look at the candles. On the candles, you're going to find a reason to ignore it. On the candle wick, resistance on the candles, right? You already hit back down into support. I know, but look on the lines. Traders are still stacked on the 5-minute, were on the 5-minute with the flat top resistance on the lines. So, volatility. I would expect additional lack of predictability in the charts. I would note for the record the complexity herewith on the candle wicks to flat top resistance vis-a-vis or in comparison to the actual line chart on the 5-minute, which we've returned to. That's a nice move. Return to a neckline, right? Left shoulder, head, and right shoulder. Indeed. Return to preceding flat bottom support, confirming as resistance. Bearish divergence. Let's see. Let me rewind the entirety of this back in through. I'm over here with the divergences. Let me get this. Come here. Come here. There we go. So I'll be testing the divergences as we look at the predecessor 3-minute. Let's go into, and this is what I'm testing right now so that you know, as you look at the computing issues in play, I'm doing divergences on kernel regressions. Kernel regression calculations, then looking at the divergences on them. So we get to the point where they require a huge load time. So I can increase the accuracy with which your indicators will work. And as I increase the accuracy within which your indicators will work, they require more computing power. And TradingView will only provide us so much computing power, as a matter of fact, as good as they are. And there's no better system that we could easily deploy into. But as we look at our kernel regression modules, both on the standard deviation calculation below in terms of a volatility on ZPAC and also up above on the actual pricing module itself, on the pricing chart itself, kernel regression above, kernel regression below, on volatility specifically on ZPAC, on price line specifically up above, calculating the divergences on said kernel regression. The divergence of price vis-a-vis the capital line. Capital line red, boom, 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 boom. Nice on the 5-minute. But calculating these specific divergences require a lot of computing power, so it's a balance between what I'm able to provide you and what will literally functionally show up on your screen. And I can provide a incredible level of accuracy if I can use the back wing of the Pentagon to compute it and deliver it to you. Joke, right? But you understand, the need for computing power is big. Like I need a D-Wave supercomputer, independent of Pentagon or whatnot. Right? We literally need a quantum computer. It's like, well, so that is a feature of our participation in the market, and it's just it's something that I'm working on to provide hopefully the best level of accuracy that I can as we're looking at kind of that optimal experience for you, right? And you want the right answer every time. I'd love to give it to you, the right answer every time, but just understand that right answer requires a lot of computing. Okay, so many times, just understand that that's currently what I'm doing to try and enhance your trade game. Okay. See, like for instance, on the 3-minute, you caught this. You didn't on the 1-minute. The 1-minute has a lot more in terms of the actual numbers printed here in terms of divergences. So it's a constant give and take that I'm looking at and trying to assess. And you saw this weekend in the back room, there's just a lot of technical work that does go on, and we're trying to just make that awesome for you. And we know that we will. We just know that we will. That's the way that I will operate. So amidst the talk this morning and kind of the goals for 2023, which is not late in the game, just understand I want you guys to be the best. I want you to be like the most dignified participants in the market. Honestly, in terms of your appreciation for the history of the markets, for the guys, everything about it. I want this group to just be awesome. I want you to be awesome. I just really do. I want you to excel in the markets the way that all the other guys, all the other traders, and all the other girls, they really want to, but they just can't because of this reason or that reason. I want this to be the year that you specifically excel into the markets. So I want to push into that goal, and I'll continue to push into that goal, both in terms of the indicators, in terms of the setup, in terms of the information that's delivered in that experience. We're looking forward to it becoming a bit more selective and exclusive as the year progresses. And I appreciate you guys being on the front end of that equation. I really do. I appreciate you being on the front end of that equation, and it's going to be really exciting. Hopefully within the week, within the 5 to 7 days, we'll have the additional divergences, which are just on the capital. I just call it a capital control line. Why do I call it a capital control? Because capital, dollars, literal, dollar deployment turning red. Be aware, just be alert, either of a potential for a contact with the 20 moving average, right? Or participation there and below. We'll go through, but we have some great primers already lined out in terms of that capital line and our Z-Pack, right, with pricing at standard deviations, and something I think that is highly appreciated by anyone really using it in the markets thus far. This is London. Hope you guys have a great day, and we will talk to you soon. Guys, let me know what's up in the back. We'll be trading. And, as you line out in 2023, what's going to really make you I want you to define your purpose in the market. I want to be aligned with that purpose in the market, and I hope it's just to absolutely just annihilate any of the records that you've had, any of the other records that you can see in the marketplace, and don't limit your vision in terms of that. You'd be like, ooh, someone, $1 million trader. Yes, $1 million traders, right, can do what? Can make $1 million in a day. I've seen it. It's been VIP. Not a promise in terms of your outcome, but don't be bridled by what you see other I just call them Cracker Jack boxes, guys, in the markets, because the market's full of Cracker Jacks. It just is like, let me open this box and see what I get. Ooh, look, more like the wind-up clown. Just stay focused. Appreciate the dynamics of the market in terms of what it can bring you. It is a phenomenal tool, okay, that can be used positively or negatively in your life. We want it to be the former. You guys know that positivity in terms of the market. This is London. Hope you guys are having a great day. We will be in the back trading. Remember to eat well, sleep well, and continue to invest in those relationships you knew were worth investing in before you started investing. Eat well, sleep well. Market's open 24/7, 365. Take care of yourself. Take care of those relationships you knew were important before you started investing. And now that you're investing, take care of these relationships. And we'll talk to you guys soon. Take care. Bye-bye.